Well, hey everybody, my name is David and I get to be your moderator for today's webinar presentation on mortgage direct mail, return on investment case studies. We're going to be comparing black and white typed letters versus the new exciting technology that has come out where we actually handwrite letters to people and increase your response rate because it's a personal relationship-driven approach. And so if you're excited as I am to hear Jeff Bush kind of talk about this strategy, sit tight because this is going to be an action-packed webinar. For some of you who don't know who Jeff Bush is and Overflowworks, Jeff is a top industry leader in the area of direct mail and direct response marketing. And he's going to share direct response best practices. He's going to talk about case studies from his over 20 years of direct marketing experience. He's mailed over 1 billion pieces of direct mail for the mortgage industry. So dude knows what he's talking about when it comes down to how to generate a response, and that's why he's so excited to talk about some of these strategies that we're going to discuss today. He actually owned a mortgage banking company that closed over 5,000 loans, over $1.7 billion from 2000 to 2007. In addition to his direct marketing expertise, he's also got some mortgage background to help each and every one of you to understand how this technology and opportunity can be leveraged at a higher level if you're already an experienced direct marketer. And if you are new to the field, kind of looking at this opportunity to pull some of the low-hanging fruit from some of the niche programs like HARP and FHA Streamline, or if you're just looking at making your phones ring a little bit more often so you got some more incoming leads, Jeff's the guy to talk to. But Jeff, thanks so much for being on the webinar today.
Yeah, thanks for having me, Dave.
Well, let's jump right into your background. For those people that don't know you from your background, just give them just a 2 to 5 minutes or 2 to 3 minute update on how you got to the place that you're at now and what kind of value you can bring to this particular webinar.
Well, I have a 17-year history of doing direct mail for mortgage companies. So I've been doing this most of my life. And that's kind of what led me into opening up a mortgage company in the year 2000. We sold a direct mail advertising company, and I had a non-compete, so I couldn't get in the direct mail business for a few years. So I decided to open up a mortgage company and leverage my experience with making the phone ring. So we got in there at the right time, opened up in 2000, and built it up to funding over 100 loans a month back in 05, 06, in the big years. And then December of 07. Everything kind of fell apart in the mortgage business, so I shut it down and kind of went back to doing direct mail marketing again for mortgage companies and car dealerships. It's kind of my background. So I've got the rare history of being in the mortgage business using direct mail myself to generate leads to fund loans, and then also doing hundreds, thousands of campaigns for different mortgage companies around the country, from back in the 90s when we were doing 125% second mortgages to today where we're funding 125% first mortgages on Fannie Mae HARP. So long history of being in the mortgage business and mortgage marketing.
Well, and we're going to tap into that expertise, and before we do that, I want to make sure that we get an idea of who's on the webinar so you can speak directly to those individuals. We're going to have a lot of people watch the recorded version of this, but if everybody can go ahead and cast their vote, just give us an idea of where you're at in terms of buying mortgage leads or spending money in marketing, because the first section of this webinar presentation, Jeff's going to talk to the bigger players, the ones that are already doing direct marketing or direct mail, and or they're maybe spending money on telemarketing or things of that nature, but they're marketing for leads. And he's going to get into more of the advanced strategies, and then he's going to go in at towards the end of the webinar, he's going to talk a little bit more about how some of the by referral people that have been out there that are looking to tap into this marketplace of direct marketing, and some of the smaller shops that are just maybe 1- and 2-man shops or women's shops, and how they can benefit from the strategy. So go ahead and cast your vote. I'll close that poll. And as we're wrapping that poll up, Jeff, why don't you go ahead and just jump into what you have seen over the last 6 months or so in terms of direct mail marketing. I mean, what's the big hitters? I mean, if you could break it down into the top, 3 to 5 marketing campaigns, what are you doing the most of? And if that's changed at all over the last 6 months, just give us kind of an overview of what's taken place.
Well, it seems like the homeowners kind of determine, what loans are the most popular as far as, benefit to the homeowner. So we look at, we call, niches to riches in the mortgage direct mail business. So we look at, what loan programs are out there that can really help homeowners right now. And the two biggest ones that we've seen over the last 6 months are, of course, the Fannie Mae HARP. If your loan's owned by Fannie Mae, you can refinance up to whatever, 125 or unlimited LTV. So in that particular loan, we've had a lot of success mailing those people a real targeted list and getting a huge response, and funding loans on HARP. The other government-sponsored program, let's call it, is FHA Streamlines, the reduction in the MI on those older FHA loans. So we've been mailing a lot of FHA borrowers, getting a lot of incoming calls, funding a lot of loans on that. We do some VA mailers. Again, rates are low, so a lot of people can take advantage of a VA, kind of a streamlined refi marketing program and then fund loans. Reverse mortgages have heated up. I mean, we've got reverse mortgage companies making 7 to 9 points in rebate on those loans, so they're real profitable. So that's been a good program. So we're just kind of following the market. What loans are, are fundable, and what loans are people going to respond to that there's a need and a benefit to the homeowner. So that would be the big four.
You're not just a lead source where you actually just sell data or sell leads, or you do live call transfers, but you're a full service marketing company that pretty much customizes marketing strategies for individual organizations, right?
Yeah, we'll design, print, and mail, direct mail marketing, and strategy, put strategies together and call scripts and different types of marketing.
Well, let's take that and move right into the idea of comparing handwritten envelopes and letters against the window envelopes and typed letters, because you've had success doing both of these strategies. And so walk through the participants and kind of give them a little taste of what you've seen over the last 6 months.
Okay, so the slide that we're showing here is just a couple of envelopes and a big difference in doing the direct mail campaign. So, the top envelope is called an A2 envelope, so it's a smaller kind of wedding invitation style envelope, and we're actually paying a team of hand workers to hand address these envelopes with the name, address, zip code, and we're putting a 45-cent first-class stamp crooked on the top right of the envelope. This was an actual job that I did that came to my house. So I put my address on there so I can get a copy of the mailer and what it looks like in the mail. So the top one is kind of a hand-addressed envelope that's going to get about a 99% open rate. And then at the bottom is kind of the traditional, standard mail window envelope, kind of what people call junk mail. Same thing. We show, the name and address, typed through a window envelope. So the differences in open rates, they say that a window envelope gets opened about 60% of the time. So you send out, 10,000 mailers, 4,000 of them will end up in the trash can before they even open to see what the offer is. Whereas these hand-addressed envelopes, we've seen 99% open rates. So you're getting a lot more people to look at your offer, and you're getting your name in front of more people, more chance to get incoming phone calls from people that normally throw junk mail away. So as we've got on the slide, average response rates for mortgage direct mail in a window envelope is anywhere from 0.2 to 1.5%. So that would be, so I can do the math, on 10,000 letters, you're getting anywhere from 20 calls to 150 calls. To narrow that down further, I would say 0.5% is kind of a national average on all mortgage direct mail with a window envelope. So 10,000 mailers, you get 50 calls, maybe you close 5 loans. These hand-addressed letters, our testing has shown 2 to 5% response. So if you're mailing 10,000, that's 200 to 500 phone calls. So a huge difference in response. And if we target the right list, we can have great conversion, and it's a better way to do direct mail.
Well, let's talk about what you stuff inside those envelopes, because that's the real, obviously hand addressing envelopes is one trade's strategy, but this idea of actually handwriting the letter. Now, this is not technology that you're using with a computer, like a computerized font, right, Jeff? This is actually a bona fide handwritten letter.
Yeah, a lot of people have tried hand addressing envelopes, and they've seen a big lift in their response rates, which is great. It's a great way to send out mail. And I've got mortgage, loan officers and companies that pay, family members in a hand address envelope. So that's, been tested out there and not anything, a real new idea. But the idea of once they open the envelope to hand write a letter to them, like you said, Dave, these are truly handwritten, letters, and not a computerized font. They're done on a machine. So when they get these letters that are handwritten, I think the curiosity of just, gosh, this person sat down and hand wrote me a letter. They must have something for me. This took some time and cost some money. That just invokes a bigger response and a little bit more personal touch, especially if we can put the loan officer's name on the letter that can actually take the phone call. So when they do call, in this case, Charles Galgano, hey, you mailed me this letter. And so when they call the phone number, they're going to talk to the guy whose name is on the letter. So there's a connection there that I think helps our conversion rates a little bit when we're taking these phone calls, converting them to loans. So these are real letters that went out. The one on the left being the typed letter in a window envelope, the one on the right being handwritten, hand-addressed envelope. So we're going to show the difference in response rates of what actually happened on this campaign.
Well, now, there's been questions submitted about the idea of, that the steno pad looks, too unprofessional in some cases or for some preferences. What are your thoughts on the idea of using a steno pad, and is there any other options that they can basically get at where they can maybe put their own letterhead at the top or something of that nature?
Yeah, I've got to tell you that this particular client of mine in Connecticut told me, Jeff, that handwritten letter looks like a kindergartner wrote it. I'm embarrassed. I would never respond to that, and I just don't think, and it's funny because, there's some truth to that, but we're really just looking for a response rate to increase, and the fact that a handwritten letter is going out. I mean, the main thing is that, handwritten letters are getting 5 times the response rate of the printed letters. We do have the option of printing somebody's letterhead and then hand writing the letter on your letterhead. So if you want to make it a little bit more professional and have your corporate letterhead, a color photograph of the loan officer and the letterhead printed, and then hand address the envelope, hand write the entire letter with your signature, we can do that. So a couple different, there's some different options on that.
Well, let's break down these two letters. And so we've got the window envelope and the type letter versus the handwritten HARP letter. And break down these results, because you mailed the exact amount for both, and you did it in the same target area. So it wasn't like one went to one side of the country and the other one went to the other side of the country. Did you do odd and even zip codes, or how did you split this up, Jeff?
Well, we do a lot of testing, and it is important that you do it right. So this particular test, I'll tell you what it was, is we pulled a list of 2,000 Fannie Mae-owned mortgages for HARP, loan amounts 150 to 417. So it was one database of 2,000 records. And what we did is a split test. So we took every other record throughout all the zip codes, throughout all the data, and we mailed 1,000 printed letters and 1,000 handwritten letters. Now we mailed them the exact same day on a Friday. So they hit at the same time to the same basic mailing list, but 2 different sets of people. The criteria was identical. And the offer was pretty much the same. If you're upside down in your mortgage, you can take advantage of a Fannie Mae HARP refinance. So it was a very accurate test on an A/B split list. And, so I think that the results are solid as far as, the test was concerned. So we mailed 1,000 of one, 1,000 of the other. Again, 0.5% response. This guy got 5 phone calls on his window envelope mailer because they're all Fannie Mae-owned mortgages for HARP with all the credit score, 640 and above. No mortgage late in the year. We really targeted this list. He had a 20% closing ratio. He closed 1 loan out of 5 calls. He makes $5,000 a loan, about 2 points on a $250,000 loan amount. So he makes $5,000. He spent, $1.69 a piece on a window envelope with the Fannie Mae targeted data, which is $1 a name. So
yeah, let's go into a little bit more detail on that guaranteed Fannie Mae data, because you've got some options of what they can choose from there. But talk a little bit more about just the importance of this highly targeted list.
Well, we can buy a list anywhere for pretty inexpensive and just kind of guess that about 30% of the loans are going to be Fannie Mae owned and about 20% are going to be Freddie Mac owned. So we can just kind of throw a dart and mail 1,000 pieces out there and hit 50% accuracy that Fannie or Freddie owns the loan. But a lot of my clients are saying, hey, Freddie Mac hasn't been too forgiving on the automated approvals. We're not having much success. We only want to go after Fannie Mae owned mortgages. So I have a way of getting a hold of that data. It's a long drawn out process on how we do it, and I can give somebody more details at a later time. But we 100% guarantee that Fannie Mae owns the mortgage, and the data comes from the credit bureaus. So it's 640 and above credit scores, no mortgage late in the last 12 months. LTV typically 80% to about 125% is the LTVs we're targeting. So it's very targeted data, and it's kind of built from scratch. It's not just a list you can go buy anywhere. We have to custom build it, and there's a lot of manual data entry involved. But so anyway, it's very targeted list, which is important with a nice mail piece. You still got to have a real good list. It's the most important part of a mail campaign.
Well, that kind of exclusive opportunity where you can actually go out there and provide the industry's only 100% guaranteed Fannie Mae on mortgage list is one of the added values that you offer. But talk a little bit more about the added value that you bring to the clients in terms of just helping them to connect with the right lenders in terms of HARP, because there's been a lot of people burned on slow turn times and things of that nature. So talk a little bit more about your HARP lender list and other types of resources that you share with your clients.
Well, because we started direct mail marketing for HARP back in April of this year, we've got about 60 mortgage companies in about 35 states that have done this mailer, received all these phone calls, and funded the loans through certain lenders. So we put together a list of there's about 15 Fannie Mae HARP lenders that are funding those loans. Some will fund them and do the MI transfer. Some will fund the expanded approvals, level 1, 2, and 3. So we put together a wholesale lender list of all the lenders that we've heard of that are funding these loans in a decent, turn time. So we provide a lot of our clients, prospects that sign up for this mailer. Hey, here's a list of all the lenders doing these loans to just help them be more successful. I mean, our goal is that not only the phones ring off the hook, but you've got to close loans to be able to reorder and reinvest in more marketing. So we're trying to help our clients any way we can and feeding them information. We have a training video all about funding HARP loans with some of the underwriting guidelines directly from DU and how that whole system was built. So we kind of go above and beyond training and educating to make sure you're going to be successful if you have all these calls coming in from HARP Fannie Mae lenders.
And now talk a little bit more about some of the conventional marketing that you've done, because there's quite a few people that have taken advantage of just these low interest rates and just got out there and either hit their large databases with a handwritten letter or an actual typed letter, and then they're also doing some farm marketing in their own backyards and getting their neighbors and people that they know in the community to bring in the letter for marketing. So talk a little bit more about some of those conventional refinance strategies, Jeff.
Yeah, so this letter from C2 Financial, just a standard printed letter showing a really low rate and telling people you can help them refinance to a lower payment. I mean, with the rates this low, if you mail something like this out, you're going to accidentally get, 0.5% response. So this particular loan officer sent out 5,000 letters, and last I heard he had about 25 phone calls, 0.5% response, and had a few loans in his pipeline just off a standard printed letter. I think we mailed people that funded their loans April of 09 or older, both FHA and conventional low LTV plus some Fannie Mae HARP data. So this was like kind of a combination of 3 different lists. Believe it or not, there's still some people out there, low LTV with good credit, that can do a traditional, conventional refi. And then next to this letter is our design on a handwritten letter, going out to people that are low LTV, high FICO, that could qualify and benefit from a refi. So notice this letter just says, hey, it looks like you're paying an above market interest rate on your mortgage loan. I can lower your mortgage payment through today's low rates. Real specific offer. We go in and laser personalize, on this particular one, handwrite personalized, the question mark where it says, is your mortgage balance still around $250,000? Are you still making payments to, Bank of America? We can personalize each letter with their actual mortgage balance and the lender they're making payments to, so it increases the response a little bit. We can actually calculate a mortgage payment and show them, hey, on your $200,000 loan, we can lower your payment, by $400 a month, through this refinance offer.
Yeah, and if somebody has a database of, a couple thousand past clients, I mean, that's a pretty good pull-trigger opportunity because they just provide you with the data, and then you go ahead and handwrite the letters and drop ship those out with the 45-cent stamps and the handwritten envelope. So it really, truly looks like that the loan officer has done the research and is, reaching out to their past clients, right?
Yeah, if they want to provide us a list of past borrowers, and they've got a couple thousand borrowers over the last few years that they funded loans for, this is a great way to do direct mail instead of just sending out a postcard with your picture on it that, maybe it'll get you 5 calls on 1,000 pieces. This is a way to really take advantage of your own database and increase the response and, kind of a warm call handwritten letter.
We got a question from the participant, one of the participants, Jeff, asking the question of when you decide to do handwritten and the more expensive marketing versus the lower cost and potentially higher quantity, black and white laser printed letters. How do you determine whether or not to recommend the handwritten letter as the go-to strategy or not?
Yeah, that's a great question. What makes me decide to do a handwritten letter is when I have a limited number of people to mail that fit my really targeted mailing list criteria. Like if you want to just mail your local county Fannie Mae and mortgages with a 640 and above FICO that are between $200,000 and $400,000 loan amounts, you might only come up with 1,500 people to mail. If you're going to send out a black and white window envelope and you get a phenomenal response rate of 1%, that's only 15 calls and maybe 2 funded loans. So I suggest using the handwritten letters and envelopes when you have a very targeted small list. If you've only done 1,000 loans over the last 10 years, to mail out a letter to those people, it's just not enough quantity to get a great response on a window envelope. You need more people to open it, more people to look at it, and you need to try to get a 2 to 5% response instead of a 0.5%. So the size of the list is crucial. The better we are at this, the more apt I'd say to invest the extra money in handwritten letters.
Well, next we want to move on to FHA mailers and just walk us through the opportunities with FHA Streamline right now, Jeff, and what kind of data is available out there in the market to pull from.
Well, FHA Streamlines, there's a huge benefit to these people that have their loan endorsed by HUD prior to June 1st of 2009. So we look at older FHA loans, certain loan amounts, and we can pull the data either from the credit bureau and get credit scores, or we can pull public records a little bit cheaper, and both have been working well. So, here's a sample letter of a loan officer that mailed out like 2,500 letters, and I think last I heard he had over 1% response. He had, was it 40? Okay, 43 phone calls on 5,000 letters, 9 closed loans. We're getting almost 1% response on these FHA letters, just doing a standard printed envelope.
You just haven't had to do the handwritten stuff just yet. The market's not saturated at this point, and you're getting a great response rate. So why change going from the letter or less expensive strategy, huh?
Yeah. Now, if somebody says, "Hey, I want to go after FHA loans that are between $200,000 and $300,000. I want the bigger FHA loans that I can make $7,000, $8,000, $9,000 a loan on." Now we're talking about choking the list down from 10,000 to maybe 2,000, and I would push somebody to do the handwritten letter. In California, we've seen the response rates on the FHA mailers. The first 10,000 pieces we mailed, there was 150 inbound phone calls. Now when you're mailing 10,000 pieces, the list has become saturated. They're getting like 30 phone calls, and that's just a result of saturation. So now it's time to do a different letter, different envelope that's going to get open, something kind of unique. So in certain areas of the country where FHA is really saturated, I would say the handwritten letters would apply, and especially if you're going after the bigger loan amounts.
So this particular client, Eric, was in Nebraska, and this was one of his email feedbacks, and just the idea of spreading out the marketing. And talk about that, Jeff, for maybe the smaller organizations that are limited on staff, that a little bit fearful of opening up the floodgates of a bunch of phone calls, and then not getting the full advantage of the marketing because they can't take and follow up with all the calls. What would you say to that person that has that issue in the back of their mind?
Well, it is important to control the amount of phone calls you're getting so you can give the attention that you need to convert these into loans. The nice thing about the handwritten letters with stamps on them is we can actually ship the client, let's say, 2,000 mailers. And they can go out to the mailbox and drop 100 mailers a day in the mailbox because they've got stamps on them. They don't have to be delivered to the post office in trays on a pallet to the bulk mail center. So the nice thing about the handwritten letters is you can kind of control how many mail each day or each week and just go drop them in the mailbox. That way they have a local round stamp, and when people get it, you know, it's probably going to be from their hometown post office, so it's going to make them even more curious who's sending them this hand-addressed envelope.
Well, now, Jeff, we talked a lot about the delivery vehicle and the content of what's inside the letters, but many people aren't aware of the fact that, you know, that has less to do with the response rate than the data does. So, well, why don't you talk a little bit more about the different data sets that you've used, both, you know, number one for Fannie Mae owned, because that's the real niche strategy right now, but talk a little bit more about where's the data come from, and what are you doing to generate a quality data criteria to really increase that response rate regardless of what you send them in terms of letters?
Well, there's two places to get mortgage data out there, and one is county recorder data, which is similar to your title company data with, you know, loan amount, lender name, loan date. And we actually do a lot of that data. We take the title data and we clean it up. We update addresses and update new loan recordings. Some of the older title data is pretty dirty. So we'll go in and clean up that data and refresh national change of address on the mailing list. The other place to get data is extracting it out of the credit bureau, Experian, Equifax, and TransUnion. We can actually buy data that's pre-qualified for certain FICO scores, mortgage rates, mortgage balances. So two different ways to get data. We do a lot of both. I mean, there's different applications that we could talk about and different reasons why you might use credit bureau data one time and non-credit bureau data another time.
I'm going to throw up a poll here real quick and ask everybody to respond to that polling request in just terms of if you want more information on Overflowworks marketing strategies and concepts, go ahead and click on yes, or the appropriate response there. We don't want to follow up with anybody that's not interested, so if you can, go ahead and cast your response. And for those of you that have questions or concerns, please submit those using the GoToWebinar control panel, and we'll go ahead and respond to those as soon as we possibly can. So if we can get everybody to cast their vote, I'll close that poll and we'll wrap up with the next steps and a little bit more on the pricing strategies and how this could be fully leveraged by each and every one of you. So we're going to close the poll in 5 seconds. 5, 4, 3, 2, 1. Great. Thanks, everybody, for participating. Jeff, talk a little bit more about pricing and then what those next steps are in terms of if somebody wants to move forward with you.
Well, pricing on handwriting the letter, hand addressing the envelope, putting a 45-cent stamp, first-class stamp on there and mailing it, including one of our targeted mailing lists, is like $1.95 a piece on these handwritten letters. We've got a minimum order of 2,000 pieces, so it's $3,900. If you provided us a list, you know, it would be, you know, less money because we're not having to go buy a list, obviously. So we can custom price out if you want to do something on your letterhead and mail out, you know, to your own database. It'd be a little cheaper than that, but, you know, that's kind of a minimum order, 2,000 pieces, $3,900. You know, we're expecting on 2,000 to get a minimum 2% response. That'd be 40 inbound phone calls and 10 to 20% closing ratio, depending on which list and loan you're marketing. You know, we do 5,000 printed letters in a window envelope for $3,450. So you can mail out, you know, 5,000 letters. And again, you know, 0.5%, you know, maybe 1% in some areas of the country, 5,000 letters, 25 inbound phone calls, 10 to 20% closing ratio, you know, anywhere from 2 to 5 funded loans. So there's a lot of different options on pricing, but that's kind of give you a basic idea on what these things cost.
Great. Well, as I'm showing on the screen here, there's some simple next steps. It's a simple 7-step process to move through this marketing marketing process to get your phones ringing with more pre-qualified or qualified candidates. And so take action. Jeff, any final words that you want to tell the panel or the participants in today's webinar in terms of next steps that they can take?
The webinar went a little bit faster than what I had originally planned for. If there's any questions anybody wants to throw out there, Dave, I know usually we don't have time for questions at the end, but if you can handle those questions. And I'd just like to get some feedback on what they think of the handwritten letters. Has anybody had an experience with handwriting versus printing or envelopes? Just kind of curious who's on the call if they've got direct mail experience, and maybe what types of loans they're funding. Are they having success with the FHA Streamlines, VA, conventional with the rates so low, or the Fannie Mae HARP? I'm just kind of curious if anybody has any questions or anything to say.
Yeah, at this point, if you have any questions, go ahead and submit them on the GoToWebinar control panel, and we'll go ahead and facilitate those to Jeff. And if we don't get to your question, we'll be happy to follow up with you and get you a personal appointment with Jeff to have him talk more about your personal challenges and barriers or opportunities. So go ahead and cast your or submit your questions now, and if not, we'll go ahead and wrap up the webinar.
I know there's one other thing I can mention, Dave, is that a lot of my clients have been asking me to get phone numbers on their database, so when they mail these letters out handwritten, if the person doesn't call in, they can outbound phone call and follow up with some of these prospects. It's a pretty warm call. Hey, did you get the letter I mailed you? I hand wrote it or whatever, I hand addressed it. It came in a little envelope. Just wondering if I could, talk to you about saving you some money on your mortgage. I think it'd be a pretty warm call to make some outbound phone calls when you have some downtime. So we can get some phone numbers. There's about 10 to 20% available phone numbers on these lists that aren't on the do not call list. We scrub the list against do not call to keep you in compliance. So that could be part of their their order, get some phone numbers. And we send them a copy of the list so they know everybody we mailed, and they have a copy of names, addresses, lender name, loan amount, loan dates. It's all part of the the data.
Great.